Good morning, traders. It's Monday, and all eyes are on one of the most talked about stocks in the market right now, Opendoor Technologies, ticker symbol OPN. After last week's explosive move, with shares more than doubling and closing Friday at around $2.25, Opendoor has officially entered meme stock territory. The after-hours action pushed it even higher, up another 17%, and the question heading into this week is simple: can this run continue? I believe the answer is yes, and in fact, I think Opendoor could potentially reach $20 this week. That may sound bold, but when you zoom out and look at what's happening, there's a real case to be made. Let's start with momentum. The volume we saw last week was staggering. More than 500 million shares traded hands in a single day. That's not retail nibbling around the edges, that's full-scale frenzy. Add in the current short interest, which sits at approximately 22 to 25% of the float, and you've got the perfect recipe for a short squeeze that hasn't even peaked yet. This kind of setup, heavy retail attention, high short interest, and low share price, is exactly what powered the rallies of GameStop, AMC, and other meme-era legends. But what makes Opendoor even more interesting is that there's a fundamental story underneath all this volatility. Now, let's talk about what's ahead. Many traders have been focused on a key event, the shareholder vote on the reverse stock split, which is scheduled for next Monday, July 29th, not this week. That gives us a full 5 sessions of runway before the vote, and the potential for the stock to build even more momentum. The vote itself is to authorize the board to have the option to execute a reverse stock split, somewhere between 1,410 and 1,450. But the vote does not guarantee they'll use that authority. In fact, if Opendoor continues to trade well above $1, which is the minimum price required by Nasdaq to avoid delisting, the board may choose not to act at all. And this is where the play gets really interesting. If the board comes out next week and says, "We're approved for the split, but we're not going to use it right now," that could send a powerful signal to the market. It would suggest confidence in the rally. It would eliminate the split as a near-term risk. And it could kick off the real short squeeze, as sentiment goes full risk on. That's why this week is so important. Every day the stock holds above $2, or pushes higher, makes the reverse split look less necessary. And if traders sense that the split might be shelved or cancelled, they may rush in ahead of the vote, trying to position for a breakout once that news hits. Now, while we're bullish here, let's stay honest. There will likely be volatility. It wouldn't surprise me at all to see the stock spike and then pull back later in the week as some traders take profits ahead of Monday's vote. That's normal. That's healthy. The key is whether volume and sentiment stay elevated. So how realistic is that $20 price target? In the world of meme momentum, sentiment can be more powerful than fundamentals in the short term. But there is a longer-term thesis here too, and it centers on Opendoor's market opportunity. This company operates in over 50 US metro areas and is the largest iBuyer in the country. iBuyers are real estate technology firms that use algorithms to make instant offers on homes, aiming to streamline the buying and selling process. Now, consider this: the US residential real estate market is valued at over $35 trillion. About $1.5 trillion in home sales are transacted annually. Even if iBuyers only capture a few percent of that, and Opendoor maintains a majority share, you're talking about billions in potential revenue. In 2023, Opendoor generated $6.9 billion in revenue, despite facing one of the toughest housing markets in recent history. The company sold nearly 19,000 homes and continued expanding its adjacent services like mortgage and title. It's also been aggressively cutting costs and tightening operations, which could position it well if the housing market stabilizes or rates begin to fall. This is where that $82 long-term price target from hedge fund manager Eric Jackson comes in. His thesis is based on operational efficiency, market recovery, and Opendoor becoming a dominant player in a digitized real estate future. Combine that with a massive addressable market, and the upside starts to look more plausible, especially if the company begins posting consistent profitability in the coming quarters. But we're not there yet. And this week is less about long-term fundamentals and more about narrative control. If traders continue to believe the reverse split won't happen, or that the board will at least delay it, we could see another leg higher. If the stock pushes through key resistance levels, like $3 or $5, then $10 or even $20 becomes a real possibility, especially if shorts start covering aggressively. But here's the caution. If the board signals that it plans to move forward with a reverse split, even if unnecessary, that could cool the rally. A higher nominal share price and reduced liquidity might dampen retail enthusiasm. It won't kill the trade entirely, but it would shift the tone from explosive to uncertain. So what's the takeaway? This week is all about positioning. Retail traders are in control right now, and the board is watching. If momentum holds, they may decide the best move is no move at all. That would be a green light for bulls and could trigger a whole new wave of buying into and after Monday's vote. So whether you're already in dollar open, thinking about entering, or just watching from the sidelines, this is the time to pay attention. We are heading into what could be one of the most exciting trading weeks of the year. If you found this breakdown helpful, be sure to like, subscribe, and drop your price target in the comments. Are we heading to $20? Will the split be cancelled? And is $82 really on the table long term? Let's talk about it. Good luck out there, and trade smart.